Analyze the numbers that are flashing on your screens. Extremely weak trends coming in from October IIP. The number is well below expectations and we have dipped into contraction zone once again. In fact, the number, just to reiterate, is minus 1.9%, and contraction coming in several components of IIP. Manufacturing itself dipping once again. So September was a bit of an even zone for the headline IIP number as well as for items like manufacturing. But again, there's contraction on both of these accounts. So manufacturing down minus 2.4%. Capital goods, the almost secular decline that we've been seeing over the past several months, almost 12 months in a row now, that continues in capital goods as well, with a contraction of nearly 26%. Electricity output has been in positive territory, but even electricity is a month-on-month decline if you're just looking at comparing the rates. So for the month of October, electricity output up 1.1% as opposed to 2.4% last time around. If we talk about other areas where there is significant deceleration that we've seen in the reported numbers for October, then worthwhile to look at the consumer durables output, which has completely flattened out, almost no growth there. Compared to 14% the previous print, the September print. So these are some of the initial trends that we're getting. Definitely something that's far below expectations because the poll was throwing up a number of a growth of around 1%. What we've got is actually a contraction of nearly 2%. What to make of these numbers? Let's ask Madan Sabnavis, who's the chief economist at Care Ratings. Madan, good evening. Thanks for taking this call. Are you surprised at this contraction that's come through?
If I'm more than surprised, I'm fairly shocked because all the initial signs which we saw in the month of October gave us a feeling that there would be a major upsurge in consumer goods in particular. And given the fact that it was a good harvest following a good monsoon and a festival season, one did think that it would be major acceleration in the month of October. This is not to be. Now, while this particular month could still be taken with a pinch of salt, the fact that we've had demonetisation in the month of November, where I think almost each and every industry segment is facing the problem of low production, I think it's only going to be downhill in the next couple of months for certain. So this negative trend which we're seeing is going to get further exacerbated in November and December, and I think that's the major concern.
And that's exactly what I was coming to, Madan. This is a number that's coming in pre the demonetization impact coming through. I mean, and throughout November, we've been getting inputs from, for instance, a lot of auto manufacturers who are thinking of going slow on production. Would you even hazard a guess as to what November is going to look like looking at these trends?
It's a much higher number. I think prima facie it appears could be something like minus 5%, if not even higher. Because just as I mentioned, I think auto segment is one particular area which is one of the leading indicators of what's happening to overall industry. And unless there's a major compensation coming from the government side on infrastructure, which I don't think so, because I think most of the attention in the month of November has gotten focused on exchange of currency and how to deal with the crisis. So I'm not quite sure how government spending is progressing. But even so, I think the government won't be going beyond what it's supposed to be doing according to the fiscal numbers. And therefore, I think there's going to be a sharp fall in the next couple of months.
Madan, what do you think are the primary drivers for this kind of a stark contraction to come back? September gave us a little bit of hope. October has washed that away, and November, as we've discussed, you're saying it could be a minus 5% sort of a number. So apart from manufacturing, where else are you seeing the primary source of weakness?
I think manufacturing is, of course, the main segment in the overall IIP. And again, if you break up the manufacturing, I think we look at basic, capital, intermediate, and consumer goods. What we're seeing is that only wherever there's a government involvement, like in cement or steel, like which comes on your basic and intermediate goods, I think that's where we're seeing some kind of positive growth. And in terms of investment, it seems to be virtually dead. And that's another disappointment. The GDP numbers show that up to September, it's been falling for the fourth or five successive quarters. And now with these kind of negative growth rates, negative consumption taking place, I think the so-called backward linkages which we were hoping would improve capacity utilization rates, leading to higher production of capital goods, I think that entire link has gotten severed. So I think it's going to be a major downside now, and probably a recovery is going to hopefully happen in the next financial year, if you're lucky, maybe in the last couple of months of this financial year.
Madan, my last question to you, given what you've just said, would you expect more response from the Reserve Bank of India? Of course, they stayed put and their own GDP projections were scaled down by only 15 basis points. GVA was scaled down by 50 basis points. Would you expect policy response, which we did not get earlier this week?
No, in fact, Surabhi, I think policy response, I think we are unnecessarily harping on it because we have a situation where rates are coming down in a normal course of activity, like deposits have gone up, banks have lowered the deposit rates, the MCLR rates. So actually asking for a lower rate and lower interest rate is not really going to help. There's nobody to take credit right now. I think that's the major problem. In fact, the only segment which was showing some kind of buoyancy in credit was the mortgage segment, and even that started slowing down now. So according to me, it's a non-issue as of now. We need to make sure that demand picks up. It's only then that interest rates are going to matter.
All right, Madan, appreciate you joining in and getting us your view on what is a clear disappointment and a shock, as Madan put it, that 1.9% contraction that we have for October IIP.